It's so confusing which asset to invest your capital into. It has been confusing to me as well in the past. In the past, I was wondering where should I invest my money so that I can stay wealthier or I can grow my wealth over a period of time. There are so many asset classes. There is fixed deposit investment where you can get like 7 to 8% return. Then you have debt instruments, you have bonds where you can get like 9 to 10% return. Then you also have real estate investment, and in real estate you have commercial investment, you have residential, plus you have REITs now. Where would you invest? Next, not stopping there, you don't stop at real estate, right? You also have gold, you also have crypto, you also have your own businesses where you can venture out and start off. You even have equity investment, which is you're buying businesses. And now you have arts and collectibles as well. There is so many classes of assets. Where do I park my money? And recently there have been so many people trying to bog you down with investing into cryptos. There are so many cryptos around available. How you decide which crypto? There's so many real estate, commercial and residential. How do you decide which investment you do in real estate? And how do you decide about gold as well? It's so confusing, isn't it? So if you're confused, please watch on this video further and please share it to your friends and relatives so that confusion दूर होगा हुई इस वीडियो में. I will try my level best so that I can clear your confusion and you can benefit out of this video, out of my own experiences of investing. Now, the foremost thing you need to ask yourself when you want to invest your capital is to answer the question, why are you investing? What is the purpose of that investment? Many people come to me and say, I want to develop my money. That's not the purpose. What's your purpose? Are you investing so that you can pay for your child's education in the future? Or are you investing so that you can pay for your retirement expenses in the future? Or if your all these needs and wants have been taken care, all these purposes have been taken care, you now want to preserve the wealth and become richer over a period of time. Richer by how much? That also needs to be quantified. Every purpose that you might have needs to be quantified as well. So just by saying doubling doesn't solve the purpose. You need to say how much amount you want to double, and it is just a wealth multiplier which you want to take into effect, or are you investing for a specific purpose? Because the purpose for which you're investing might get jeopardized if you invest in the wrong assets. So hence the purpose is very, very important. The second thing what is important when you decide upon your investment is to understand your own risk appetite. Now you might be very aggressive in your returns mentally at that particular point of time, but when the markets crash, maybe equity markets crash, you become conservative at that point of time, wherein you should be aggressive at that point of time. So you need to see your mindset, how it is, whether is it an aggressive mindset or whether it's conservative, and these factors could also be dependent upon your age. If you're in the teenage, you can be aggressive in your investment, and if you're towards retirement, then you need to be conservative in your investment, but it's not a rule to be conservative at the time of retirement. You can keep certain amounts conservative and some amount aggressive still during retirement. It all depends at that point of time. So these are the factors, these are the major factors you need to consider when you decide about your investment. You need to decide what is the purpose, what is your risk appetite of the investment you want to make, what is your own risk appetite which you can take, which you can afford to lose money on. Now once you decide these two aspects, if your purpose is short term, when I say short term, it is like up to 2 years of duration, then your investment has to be either in bonds or debt instruments or in arbitrage funds. These are the investments which can give you better than fixed deposits. It can give you 1 or 1.5 percentage points better than your fixed deposits. So, but nevertheless, you need to approach your financial planner so that this is a more of an educational purpose video, but to be thorough with the decision, you need to talk to your financial planner as well. After you have covered your short-term requirement, you also then need to look at the medium-term requirement, which is about 2 to 5 years period. And for 2 to 5 years period, you can take a mixture of conservative as well as aggressive returns. So you can put a balance. To what extent, to what percentage, that depends upon your risk appetite and how close in that 2 to 5 years is your goal. Now, as a generic case, for 2 to 5 years goal, the expectation is that you need to have 40% in equity and 60% in debt or arbitrage funds or bonds or maybe even fixed deposits, so that your for that 2 to 5 years period, because the medium term period, you can't afford the volatility of the market. You can't afford to get significant returns over a period of 5 years. You need to invest beyond 5 years if your purpose is long term. That means if your long term purpose, now you want to save for your child's education, which is more than 7 years down the line, then equity is the best place to invest, because that has proven time and again that it is capable to give more than debt, more than even gold investments, more than even fixed deposits over more than 7 years. So if your purpose is for more than 7 years towards a retirement reason or towards your marriage or towards your children's education, then the best place to invest is equity investment. Now, when you're doing investment in equity, it could be either direct or it could be mutual fund. You decide what you want to go with, or you talk to your financial planner what is best suitable for you. So it all depends whether your need is short term, whether your need is medium term, or whether your need is long term. According to this, then your investment asset class will be decided. And now if you are like fully invested, you're invested in all specific avenues, like when it comes to fixed deposit, bond, debt, and equity, and even gold as a balanced approach. If all your needs are taken care from a short, medium and long term, and now you're looking for a wealth generation perspective, then you can diversify into other asset classes where you can afford to lose money. So that is where investment in cryptos can come into play. That is where investment into art and collectibles can come into play. That is where your investment into high risk equity can also come into play. For example, startup equity companies, if you want to invest there, those are some of the diversification which you can afford to do once all these needs and wants are taken care for sure. Having a certified financial planner would do the work for you, even though it might cost you money initially. It does serve the purpose of planning it out, of planning your finances so that you can meet various purposes. That is what I want to share in a specific video. Hope you have liked it. Please share and subscribe if you have liked it, or if you are looking for certain more information, you are expecting certain more details in a specific video, please drop a comment. Bye.